afternoon. You're watching this Saturday edition of News Now with me, Ruchi Bhatia. As always, we've got a power-packed 30 minutes of news lined up for you. Let's get started with what the RBI Governor Shaktikanta Das said early this morning. The RBI Governor Shaktikanta Das saying that banks and financial systems will now have to do COVID stress test, identify vulnerabilities and raise capital to tide through the current times. He was, of course, talking at the SBI conclave early this morning and said that the financial sector may be seeing high NPAs, capital erosion due to the COVID-19 induced lockdown, but advised the state-run lenders and private lenders to raise capital preemptively. Let's get you the RBI Governor first up.
The key takeaway here is not just that there is possibility of increasing vulnerability or that there is possibility of rising NPAs. That is something which is evident, it is obvious. When a natural calamity happens, when there is flood, when there is cyclone, when there is disruption due to natural calamity or other such incidents, naturally the repayment activity, the repayment behavior or the repayment capacity of certain borrowers get impacted, and that does impact the NPA position of banks. So in a situation like COVID-19, naturally there will be some consequences for the NPA position of the banks. But what I would like to emphasize here is that this is not really the key takeaway. This is obvious. The key takeaway from what I am saying is how we as a system, how the banks and other financial entities deal with this challenge, how they respond to this challenge. In such situations, as I have already said, I think it's become a lot more important that the banks will have to improve their governance, the banks will have to sharpen their risk management skills, and the banks will have to raise capital in an anticipatory basis instead of waiting for a situation to arise in advance, and proactively it is necessary. Banks, both public sector and private sector banks, build up adequate capital buffers. Post-containment of COVID-19, a very careful trajectory has to be followed in orderly unwinding of counter-cyclical regulatory measures, and the financial sector should return to normal functioning without relying on the regulatory relaxations as the new norm. The Reserve Bank is making continuous assessment of the changing trajectory of financial stability risks and upgrading its own supervisory framework to ensure that financial stability is preserved. Banks and financial intermediaries have to be ever vigilant and substantially upgrade their capabilities with respect to, as I have already said, governance, assurance functions and risk culture.
All right, that was the RBI Governor once again reiterating that banks have to build buffers during these times, talked about risk assessment as well, and of course the fact that there has to be a careful unwinding of all the measures that the central bank has taken during these times.